Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and it promises to be an interesting day of trade simply because of the volatility and the choppiness in the world markets. Now, first, what the US markets did. I'm not getting you a virus update today. There isn't a major deviations from the previous time. So let's ignore that for today. The US markets were doing okay for a brief bit, and not okay by the way. By okay, I don't mean they were in the green at any point of time, but I'm just saying they're doing okay for a brief bit, then succumbed to nearly 1,000 point cut for the Dow, and then a little bit of how do I say, a recovery of sorts for the Dow and the S&P 500. The Nasdaq probably fared maybe a touch better, if you will, towards the latter half of trade, but there was a bit of a recovery, if you will. Now, curiously, as a result of what's happened by virtue of the fall yesterday and the correction Friday, remember? And we spoke about how 2 days ago, I spoke about how after 9 straight weeks, we're seeing the first week of a corrective move. This has brought S&P 500 on the basis of, well, some trend line, the S&P 500 now testing support at the 50-day moving average. Now, is this the reason why the futures are trading marginally in the green? I don't know. I don't follow technicals as much, I'll be honest. So whatever I say about technicals will be like whatever, like a kid speaking about, like a junior KG kid speaking about economics, because I don't understand technicals as well. But since the Bloomberg terminal was pointing out to this very interesting chart, we thought we should bring it to you. So let's see if the moving average is a friend for the S&P 500 bull or not. Time will tell. But yes, the futures are trading marginally in the green. Is it having an impact on Asia? Well, you would presume that Asia and the SGX Nifty, the way they are trading right now, are probably not trading with deeper gashes simply because the US futures have bounced back. So if you looked at the US markets yesterday, you would have thought that there will be deep gashes in Asia. Yes, there are gashes, but they are not dramatically deep. Look at the numbers in the brackets, what Europe and US did versus what Asia is doing currently. Of course, this may well change. And let's get the SGX Nifty up on the screen. It just give us a sense of what the SGX is indicating we are likely to do today. It doesn't mean that is how we'll shape up during the course of the day. So hardly any gash there for the S&P 5 for the SGX Nifty, but we also had a bit of a corrective move yesterday. So you have to keep that in mind. In fact, if you get the MOV function on the Bloomberg terminal up on the screen next, and I'm loading you with Bloomberg charts, well, it'll show you the extent of the damage, which of course happened in the large caps. At the broader end of the spectrum, the market breadth and the kind of moves that some of the stocks made in trade yesterday. So 164 to 333, bad, not as bad as feared, but the worst market breadth that on the S&P 500 or the Nifty 500 and S&P 500 that we've seen for maybe at least 3 weeks, if I'm not wrong. Of course, there were winners. Of course, there were stocks which are doing very well. BSE as an exchange has doubled in value in the last 6 months. Indiabulls Real Estate and some of the other realty stocks did extremely well. So there were clear-cut winners out there. At the same time, of course, the Adani Group stocks, some of the others came off quite rapidly and stayed low. So, I mean, mixed bag of sorts, but the market breadth was certainly adverse. Now, therefore, what are the things to watch out for, and what's the Nifty chart or the index chart to watch out for? So first, the things to watch out for, I think oil had a very bad gash. I think it fell about 70%, dropped below 70 because of the OPEC preparing to boost production as well as COVID concerns around the world. So, well, I spoke about it so many times, even though fundamentally everybody is bullish on ONGC, Oil India, the stocks don't tend to react too positively when the markets are moving up, and they tend to react very negatively when these crashes happen. So could there be a deeper gash today? Maybe, but it's corrected quite a bit, ONGC, from 125 to 110 in a stock which is already at favorable valuations. So let's wait and watch. But yeah, this is not good news, essentially. So keep that in mind. Rupee yesterday fell to nearly 75 to $1. And therefore, I would presume that currency sensitives from a trading perspective, by the way, not from an investing perspective, are in focus. Keep in mind, I don't think any of these companies get materially impacted in a single quarter or business decisions because of the currency. But yes, there are at the margin some impacts that happen on specific hedges, etc., which might all be in focus. So people need to do their own research. Really, I can't prepare a list here. But yeah, the rupee did fall. And if there is more weakness in store, then the currency sensitive certainly in focus. I would presume that because world over, because of these COVID concerns and demand concerns or perceived demand concerns, etc., if everything is falling, industrial metals too might have a corrective move. So maybe we'll see a bit of a lag before an uptick comes in. Therefore, watch out for the metal stocks until the results come out. Maybe just maybe there might not be too much of, as they say, PG in the metal stocks, but you never know, really. And of course, the one chart that I wanted to bring from the CK Narayan story, which gets published over the weekend. Yesterday, we showed you the Nifty and how the volumes are coming off despite the consolidation. This is the really important chart. You may well think that the Nifty is in a bit of a lull, there's consolidation, volumes have dipped, and what if Nifty comes down? Look at the mid caps and the small caps. The mid cap 150, the small cap 250 indices weekly, the relative performance since the last few whatever weeks, months, and just look at those bars there, look at the charts there, and look at the kind of performance that the mid caps and small caps have given. And this is where people should be uh, monitoring their performances both on the upside and the downside. So you may well see that the Nifty may not do too much, but the mid caps and small caps in your portfolios will do tremendously well. At the same time, because they've done so well, if there is even a very small corrective move on the indices, you never know what's the kind of resultant move that can happen. I know I'm confusing you out here, but the larger point is the action is not happening on the Nifty. The action is happening in the mid caps and the small caps, both on the upside and the downside. FI sold quite a bit in yesterday's session, 2198 crores, even though DI is bought about 1047 crores, but a large sell number, large candle from the FI side of the selling side, so keep that in mind. What are the things to watch out for today? Well, a few numbers. I've brought you the main ones: Asian Paints, Bajaj Finance, and ICICI Prudential Life. So all three would be interesting. And after HDFC Life's insurance numbers, it'll be very interesting to see what does ICICI Prudential do in terms of its provisioning, because that I think was the key thing in HDFC Life numbers yesterday. The management will be talking to us at I think 10 a.m. So you may want to log in to hear the conversation with Vibha Padalkar of HDFC Life. Speaking of HDFC Life, speaking of the others, let's talk about the result stocks which might react today to numbers or otherwise. Unfortunately, I don't have very great news, but let me bring it up anyway. So HCL Tech, and I think the Morgan Stanley note was the best one on HCL Tech, and which is why I brought that out. So they are, of course, saying that they maintain their equal weight with the target price of 1,065. Now, the reason why they're saying this, that one, I thought this was beautifully done by Morgan Stanley, that they're saying if you look at HCL Tech, and because people compare the HCL Tech, there's a discount versus peers. Now let's look at what HCL Tech did in Q1 versus peers, right? QOQ growth slower compared to peers, all of them till now. There was a complete lack of positive surprise on the FY22 guidance after what Wipro, Infi, maybe even a TCS, but definitely what Infi and Wipro did. People thought that if HCL Tech would also do the same, right, in terms of FY22 guidance, no positive surprises. In fact, I stayed away from saying anything about a band or whatever. They just said, oh, we are not focused on revenue guidance, we are focused on execution, which is great as a strategy for the company. But I think the street maybe wanted more. Though they've given ample clarification of why they're saying so. So I'm not saying that the management is not coming out clean. All I'm saying is that their focus seems to be right now on deal generation. I don't know if the market likes it. Let's wait and watch. Margins were weak on a YOY basis. And I think what Morgan Stanley's note summed it up, that in the absence of any rise in revenue growth estimates, the large valuation discount versus the larger peers will persist. So this is their view, that the discount will persist. Now, if you believe that it's available at a very steep discount, maybe you want to go out and buy it. And yes, compared to peers, it's available at a very steep discount compared to at least TCS and Infosys. But let's wait and watch. Today, you might see a negative reaction, but it might see some buying later on, simply because on a valuation front, it is available very, very cheap. And the client wins are actually pretty strong. ACC, I thought was a bit of a beat on most counts compared to Bloomberg estimates. So revenues at 3884, the estimates were 3705. Net profit 533, the estimates were 453. EBITDA at 874, the estimates were 726. So on all counts, including margins, I think it did really well. Margins were some 22.5% versus 20%, and certainly above estimates. The point is, most brokerage notes that I scan, except for Nomura maybe, others were ho-hum. But I still think that if there is one stock that has a chance in the large cap space to give a positive outing this morning because of the results, it has to be ACC. I'll be really surprised if HCL Tech does that. I'll be really surprised if HDFC Life does that too. And again, I've brought you a brokerage note which summed up HDFC Life's numbers the best. So Jeffries, they're very bullish, by the way, per se, but they've revised the target price to 800 from 880. I think it's important. They're maintaining the rating. The target price has been cut to 800 and it was 880. So that's a 10% target price revision on an HDFC Life on an index stock, which is pretty steep, by the way. So they say that the front ending of the excess mortality reserves of 7,700 crores is 5% of net COVID claims of FY21, and the higher reserves impacted operating return on embedded value. They see a 19% VNB CAGR over FY21 to 24 with 18% FY23 return on embedded value. Now, the point is, viewers, these terms are not easy to decipher. You might see that what is the meaning of this VNB CAGR versus and the ROEV, etc. And I fully get that. I think if you want to focus on HDFC Life numbers today, what you got to focus on is that they had made a provision of 165 crores last year for COVID-related claims. They made a provision of 700 crores for COVID-related claims. And therefore, maybe the profitability impact is felt only in Q1, and they have provided for all of that. But that's a very steep provision, and that makes the ask rate on a normalcy of profits for Q2, Q3, and Q4 very, very high, which they will not meet, of course. So the bottom line will get impacted for HDFC Life for FY22, and that is certainly a bit of a dampener. Yeah, the other aspects remain strong. The growth remains strong. They, in fact, I think we've recorded the interview. We played out at 10, as I said. You might want to hear that. She's expressing confidence on a lot of parameters. The guidance is not bad. So maybe the corrective moves may not be very, very strong, but you would probably presume that there will be a bit of a corrective move. It's 678. It's around the price at which those bulk deals were done. So don't quite know of the extent of damage, but I'll be surprised if there's a large positive move on HDFC Life today. BPCL, there's a Bloomberg note which came out post-market hours yesterday saying that the government's plan to sell a majority stake has slowed down amidst the pandemic. The discussion with investors on the stake sale haven't progressed much recently, and the disposal may take place as soon as early next year rather than in 2020. So yes, maybe in FY22, but in the last quarter, at least that's what the Bloomberg report seems to suggest. I don't know if this dampens the spirits a bit on BPCL. Let's wait and watch. The Adani Group, which was in the eye of a storm yesterday and corrected quite viciously yesterday, a lot of stocks, they've given a clarification that they have always been transparent with the regulators and have full faith in them. And they say that while we've always been fully compliant with applicable SEBI regulations, they have made full disclosure to SEBI and they've not received any communication or information requests recently. So the junior finance minister reportedly did say that SEBI is investigating some things, but Adani is saying that we haven't received any notice as well. So some clarification from their end. Does it improve the sentiment on the stock? I doubt. Or stocks? I doubt. If anything, viewers, if you want to trade the Adani Group stocks, maybe Adani Ports and Adani Enterprises are probably the ones that you should be. The others probably are very, very volatile and choppy and risky right now. Last but not the least, I just want to leave you with the delivery volumes for the new kids on the block yesterday. Remember, I said that they might see some institutional buying post-listing. Well, GR Infra, 46% mark for delivery. Clean Science, 54% mark for delivery. So pretty strong delivery-based buying seen in both of these names yesterday. You might want to check them out. Well, that's it from my end. Choppy day probably ahead, but not as bad as what the US markets felt yesterday. Thanks so much for tuning in the trade setup. And if you're stepping out, please stay masked up.